Chris McNaught, your lender for all over Colorado, coming to you with my Friday market update. It was an exciting week, very exciting week for data. We saw core CPI come out this week with a three handle, that's right, 3.9% on the core inflation. That's the Federal Reserve's favorite measure of inflation. Of course, their target is 2%, but we're seeing a nice downward trajectory. In fact, the inflation report came out a little bit higher than what the market expected, which normally is bad for interest rates, but the market just loving to see that downward trend right now. So actually interest rates a little bit better here at the end of the week than they were at the beginning of the week. So end of the week here, we're kind of hanging out still kind of roughly in that 6.7, 6.8, national average 20% down, good credit. Other news this week, CoreLogic comes out and shows that the housing prices in November, their data is always a little bit old, it shows the highest prices ever. So housing market continues to be really strong. Different markets, of course, always behave differently. I'm seeing spots along the Front Range that are not at all-time highs, some spots, in Grand Junction that are not at all-time highs, but overall, the housing market has been remarkably resilient against basically the lowest demand that we've seen in 25 years for now well over a year. So remember, we had the greatest crash in demand ever in 2022. So single year, there was never a time when we had more of a demand crash, yet price crash did not happen. Well, why is that? Let me answer it for you. Because overall, fundamentally, we're still in a housing shortage. So to give you some context for now versus 2008, let me give you some numbers. So from 2000 to 2010, we had 16 million housing units being built. Now that's condos, that's apartments, that's single family homes, the whole nine yards. 16 million were built during that decade. Yet population growth, or specifically household formations, only went up 11 million. So we actually overbuilt by 5 million homes during that decade. Crazy. That's part of what caused the housing market crash, or allowed the housing market crash of 2008 to happen. We were excess supply, which is the opposite of what we have right now. So now you look at the most previous decade, 2010, of course, through 2020, and we had 9 million homes being built, or 9 million housing stock being built, and household formations was 10 million. So we've been underbuilding for the last decade, and that has continued for the last 3 years as well, by the way. And so we're still just fundamentally in a housing shortage, and that is why the super low demand, high interest rates could not crash the housing prices. So if you like this video, please click like. If you have questions about financing a home, reach out to us. Have an awesome weekend.